Hey guys, hope you are all having a fantastic day. Today we have a lot to discuss, so let's skip formalities. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. Markets, coming off of the worst trading week since the onset of the pandemic, fell sharply today. Weary investors hoped that this was just a small drop before a quick bounce quickly faded away, as it is an undeniable fact now that we are in full correction mode, which for some off reasons some analysts thought wasn't a thing yet. Markets saw 3 consecutive weekly declines kicking off the year, and now all eyes are set on the Fed's upcoming meeting as well as in the upcoming earning reports from the banks as well as tech giants Tesla, Apple, Boeing, Microsoft and many others. Right now more than ever, investors are looking for anything to grasp on for hope. It's almost as if there is confidence in the markets but no news to back up this feeling. We started this year with the wrong foot and we have lost all balance. Indexes began the day plunging heavily, but after trading at their lowest form, they quickly reversed. I believe the big sell-off we had was felt to be too abrupt and exaggerated, and big investors started buying. The S&P 500 ended up 0.3%, with the Dow also coming 0.3% higher. Nasdaq closed up 0.6%. People, please keep in mind that stocks have been running up and wild since the early pandemic low of March 2020. Ever since, stocks have more than doubled in the time frame, without anything more than a 5% pullback in 2021. Stocks needed to have its correction, even as uncomfortable as it may feel to some. I talked about what to expect from the markets this week in yesterday's lengthy video, so be sure to watch it. However, something I did not talk about was Ukraine. Tensions are getting worse by the day with the new Russian and Ukrainian conflict taking place, with investors becoming more anxious as fears mount that Russia could invade Ukraine at any moment's notice. An invasion, and resulting conflict, will be the first factor that I will acknowledge will crash the markets. There is no way markets, under current conditions, survive around current levels if Russia starts a war. That would be a nightmare as of itself, and the whole market correction will look like a funny optimistic joke in history books, as we could probably have the worst crash since the Great Depression. The United States and the United Kingdom have sent notice to withdraw some of the staff in local embassies in Ukraine, which obviously is not inspiring confidence that the situation will resolve quickly and peacefully. European markets are taking a huge hit with current conditions as well. So overall, the good news is that stocks had the worst day yet, but quickly came back to end positive, but the bad news is that the Ukrainian conflict is beginning to weigh heavier on investors' heads, and if a war commences in the region, I will bet all my tendies that it will actually crash the stock markets. So far, my prediction for what is happening is in line, as we have not yet fallen too bad and the pullback seems momentary, but things could change quickly with Europe in the brink of war. I want to talk about inflation and the Fed once again, but it is the hot topic right now that everyone should have at the forefront of their heads. I guess some people are still lost as to the basics of what is going on with inflation, they just know it's bad, so I will treat this portion as a quick walkthrough to understand what is going on. We know inflation reached 7% in December, and so we ask ourselves what has happened in the past couple months that allowed such a crisis to occur. The simple answer is that the pandemic, supply chain shocks were expected to diminish over a relatively small time frame. As we know now, these two issues haven't gone away, which makes all the efforts done by the Fed, who publicly labeled the effects of inflation as transitory, pretty redundant and ineffective. The moves done by the two administrations haven't helped, mostly because they haven't had good policy instruments to bring inflation down. With rising rents and cost of living, with wages rising very little, the economy was set for failure from the start. It's a matter of very poor situational assessment, poor preparations with set policies that are outdated and were bound to only make any efforts to attempt to remedy the situation fruitless. A lot of people, however, view inflation as a good thing because of the belief that long-term, it will lead to much-needed changes in policy infrastructure that will set us up for success. One of these things is achieving high wages for lower-paid workers, which are deemed as essentials by the government itself. I am sadly pessimistic about this. You see, when it comes to the current growth of wealth inequality, things are working just as they are meant, with the ruling class acquiring more and more assets while the lower class has less options. To make long-term positive impact in redressing income inequality, we will need very profound shifts in the way labor markets work, the extent of change current government programs work, and most importantly, revamping laws that aim to protect the poor and punish the greedy rich. With the way things have shifted, I have little to no confidence the current administration nor the Fed, being led by no other than Jerome the Joke Powell, will make good long-lasting policy that will benefit that middle class, much less the growing poor class. So since prices will continue to rise, and wages are not going to make up for this growth, we ask ourselves, what are we to expect from the Fed then? And to this I must say that nothing noteworthy will happen tomorrow. The Fed has already announced what they are doing, so it's not like the Fed will surprise markets when they say more rate hikes are coming. Most investors are looking to the March meeting to see the first rate increase. What I think will be most important here is listening to what Jerome the Joke Powell will say about inflation and the way they assess it. We know that they initially viewed it as transitory, but officials now know that this wasn't true at all and a grievous misinterpretation of what has been happening. So Jerome Powell will be forced to assess the situation differently, and this is what me as well as Wall Street and other investors are looking at. We want to know how the Fed views inflation so that we can prepare ourselves as to how the market will behave and position ourselves for success. As I will always repeat, the worst thing about markets isn't bad news, but uncertainty of things to come, and once we have a good understanding of the Fed's angle and point of view at current economic conditions, we will be able to make long strides to get out of this correction and begin moving up again, unless Putin decides to collapse his Russian empire with one last stand move and igniting a conflict in Ukraine, which he will ultimately lose as Russia doesn't have the means for long-term warfare and much less the economic costs that will send them into the dark ages. But if it happens, do expect markets to get redder than a used tampon. In regards to my beloved babies AMC and GME, nothing new came out today, just downward trading like the rest of the stocks in the market. Something interesting I have noted is that the media is talking more and more about meme stocks, and are writing up articles about how GME and AMC have fallen and continue to disappoint investors. That's kind of a trashy way to view the situation, considering everything else is falling but they are hyper-focusing on meme stocks. Goes to show that the mainstream media does have an agenda and vendetta against meme stocks, and that only makes me want to buy more. I think that shorters have these two stocks by the throat for the moment, with current market conditions giving them a ton of leverage in manipulating us. I think that through options, we are priced in to get bled out for a while, but that honestly can make us stronger in the end. Let's now talk about today. The Fed submitted over $1.1614 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 55% of the total volume today, while dark pool trades for GameStop accounted for 45% of the total volume today. AMC had a larger amount of buy orders than its sell orders, with GameStop also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC traded bearishly, losing over 7% for the day. It began trading very bearishly during the pre-market, constantly trading below the VWAP and moving from 17.50 to 16.40. Upon market opening, after a quick bounce up, AMC fell from that 17 and went down crashing to 14.23. After reaching this low, AMC began moving upwards, reaching a high of 17.29. After a retracement that had AMC retest the VWAP around 15.75, AMC bounced up and closed at 16.64, above the VWAP. It was certainly brutal to see how AMC fell, and though it bounced up pretty aggressively, I am still not confident will continue moving upwards into tomorrow with all that is going on. What I do know for sure is that investors have been massively buying this dip, and it has been amazing to watch so many people grab hundreds of shares all at once. As for what to expect for tomorrow, it is impossible to determine where AMC will trade. So many changing variables with a volatile market make it incredibly difficult to project probability of any kind. I could say AMC will have support at 14.23, but if major indexes flatline, AMC will not even stop at 14. Right now, all trading patterns and technical serve to make sense as much as the horoscope. Just buy and hold, and once we begin to trade normally again, we can have a better idea of what is more probable to happen. GameStop traded bearishly, losing over 5% for the day. It began trading very bearishly during the pre-market, staying under the VWAP and on many occasions, testing the lower band of the VWAP. During the pre-market, GameStop fell from 104 to 98.24 at one point. Upon market opening, it bounced above 102 only to fall down a precipice, eventually reaching 86.29 as its lowest price of the day. After reaching this level, GME began climbing up, eventually reaching 100 again. It retraced again down to test the VWAP and then bounced up again, closing at 100.15, above the VWAP. Like I said, it is impossible to determine a good structure by which to make any projection based on current estimates. GameStop is wild, and tomorrow we could moon as much as we could break below 86 with the way the market is behaving. Stay strong. Buy the dip if you can and enjoy the ride. I see many of you alone. Many are struggling with the current market conditions with onset feelings of isolation and desperation. I know many of you would like to have other people to talk to, as it will make you feel better. I highly implore you to think about joining my free Discord, which will be linked in the description and comments. There are over 1,000 traders talking about everything in the market, having good and fun conversations and posting memes, enjoying the time. This is a big social movement, and meme stocks have built so many communities, and I see that a large portion of my audience hesitates about joining. I want to personally extend an invitation to everyone. I don't want anyone alone or isolated during these times, so please come join us. You don't even have to participate in talks, I just want you to be in the group. Links will be below, so hurry up and join us because I miss you and we want you here with the rest of us. Let me know if you have any questions and what you thought about the video. Let me know if you bought today's dip or if you were waiting to see if it falls any further. Thank you all for the love and support you have shown me. I hope to see you tomorrow on the next one. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day, keep on buying the dip and to the moon.